All right, so I wrote a publication on this on the blog, but I wanted to give you guys a video. These are 7 things you should really consider. I mean, like, highly suggest you guys consider these 7 things before making an investment into an algorithm, a bot, whatever you want to call it. Okay, a quant. First and foremost, number 1 is history. So this sounds like a no-brainer, but you're not necessarily looking for, oh, like show me a year's worth of data. That's not really what I mean by history. You want to see, yes, longer than 24 months on the data, sure. But the other thing is you want to see all the data, meaning, can you see the max drawdown? Can you see like the Sharpe ratio, like all of that? It's not just a 12-month of data or longer, it's all of the data. Is there any missing data? Is there a missing month? Why? Is it forward tested or back tested? People, I think this is the biggest misconception on the planet specific to futures, back testing or forward testing. People say all the time, hey man, like it's got to be forward tested. What you need to understand is if you are using legitimate data like the CME group and you are doing, let's say that you're looking at a live account and a fake account or whatever you want to call it, a back-tested account. It's going to be exactly the same data if you're using CME Group as your data source, which is like the legitimate data source. Okay, every trade would be exactly the same. All the data, all the ticks, the entry, the exit, it's all going to be the same. So don't get caught up on that because a lot of people are like, well, if it's not forward tested, I won't do it. So show me last month. Last month as in the past? Because that wouldn't be forward, that'd be past. Well, you know what I mean, like show me the real data. The CME group, like the actual trade, the actual execution of the trade, the profit, the loss, the ticks, the drawdown, like that, right? Yeah, but only if it's real. You see where you guys get my point. So it is, backtesting is okay if the data is tick level data and you're using an accurate data source like the CME group. Okay. Make sure that it's also tick level, like I said, because if you do not do tick level, there's a lot of discrepancy in, let's say that they're using a 5-minute candle or a 30-minute or a 60-minute candle, that data is going to be skewed. Okay, because a lot can happen in 60 minutes. You want tick. The smallest measurement that you can get is tick level. So that would be on the history. Number 2 would be, is there a setup? Is there a set and established stop loss? Now, how we do our stuff is every trade has to have a stop loss. Okay. A lot of people, I was talking to even some people the other day that they were doing like 3,000 trades a day. You're not going to have stop losses on those trades. Okay. Is there a set and established stop loss on every trade? If not, I'd be very cautious. How many trades can be open at a time? Here's another big one. If a company can have, let's say, 1,000 trades open at a time, first and foremost, that would be Forex because you can't really do that with futures. You have the first in, first out. On Forex, let's say that you have 1,000 trades open at a time. Let's say that there's a black swan event in the market and everything goes bloop. The likelihood of some of those 1,000 not hitting the stop loss correctly, if they even have a stop loss, is very high. Okay? The likelihood of it going too fast or whatever times 1,000 is very likely. So how many trades can be open at a time? We do 1. Okay? Now 1 with an established stop loss, let's say that the black swan event happens and the market goes, just dives. Yeah, we're going to lose a trade probably, and we're going to hit our stop loss, which is probably a couple $100. Not a couple $100 times 1,000 times 1 trade, not thousands of trades. Number 5, grid trading and martingale. If your bot or your algorithm that you're looking at, if they trade grid or martingale, you need to run. I beg you, run. Okay? It'll look good until it isn't good. It'll be, oh, this thing's been great for a year, and then it will crash. Okay? It will. And I'm going to explain why. With martingale, You are doubling down on your losses. Okay. Oh, we're in drawdown. Let's add more money or more contracts. We're more drawdown. Let's go ahead and double down. It's a little bit kind of like blackjack, and you just keep on adding more and more and more and more. Positions are getting bigger, 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 and you're banking on the market to go back up. Now, will it? Pop quiz. Will the market go back up or down? Yes, it will. Absolutely. But are you going to run out of money? Are you going to blow your account first? So literally, these people are gambling. When I say these people, if they're using martingale or grid, they're gambling with your money. They're gambling and betting that the market will reverse before they blow your account. That's a bad. I will never, ever, 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 ever do that again. I have done those in the past. I'll never do them again. Right? When I was young and dumb. Next up is how many people are using it. So this can be a little bit deceiving because a great bot can have just a couple people, and a bad bot can have 100,000 people using it. So that's not what I'm talking about, really. You want a decent amount of people using it that are having good results, okay? Call it 50 would probably be okay. 50 people that are having good results. And the next one is, where can you see those results? Meaning, are there people talking about it? Somebody said, like, hey man, I've got 1,000 people using my bot. Cool, man. Like, where are those people? Can I see what they're talking about? Okay, so how do I know that there's 1,000? Just believe me. Probably not going to do that. Probably not going to do that. So yeah, who's using it? How many people are using it? Where are they talking about it? You know, now some of this stuff is reviews like Trustpilot. Trustpilot's probably a little bit deceiving because most people that are going to leave a review, it's going to be positive for the most part. So where's the community? Is there a community? Is there a group? Is there a Discord? Is there a Facebook group? Like, where are they? Number 7 is account minimums. Also deceiving. You might be thinking, Jordan, if there's a really low account minimum, that is good. I'm here to tell you that that might not be the case. Okay? Especially with futures, if you have this tiny, tiny, tiny minimum, you're going to attract a lot of people, right? And what's going to happen is that with a small minimum, you have a very small margin for being able to place a trade and execute a trade. A lot of trades, they need enough room to breathe. So you want room to breathe, and if we breathe fully, we don't hit our stop loss. That's what you want. A tiny account, you're going to only have a little bit of breathing room. Boom, you hit your stop loss, and that happens every single time. And you're like, man, this strategy sucks. I keep on hitting my stop loss. No, it's because your account is so small. So it's not a bad thing if somebody says, like, hey, we have a minimum of 5,000 or 10 or 50,000. That's not negative. What they're saying is that this is legitimate for legitimate users that actually have money. It's not for the person who wants to get rich quick. It's not for the person that's trying to become a millionaire overnight. It's for legitimate people that have a legitimate account that gives us enough breathing room to execute the strategy the way it was designed. Okay? So keep in mind, and I say this all the time, 73% of all hedge funds are using algorithms and bots. Number 2, 80% of all trades that happen in the marketplace are algorithmic. So if you're not doing this, you are literally the minority. You got to ask yourself, why are 73% of hedge funds doing this? Jordan, I've seen their office, like they have a lot of people there overseeing the algorithm, not pushing buttons and tradings. Anyways, 7 things to think about or to consider before you get involved in a algorithm, a bot, a quant thing, whatever it might be. If you want to see ours and if you want to vet ours, let me know. Shoot me a comment down below or shoot us an email. We'd be happy to show you why and how ours match this list that I'm talking about. See you guys.